Here we go. Welcome back. This is the Alchemist Nation podcast. My name is Walter Morello, and I'm getting to hang out with some of the coolest people in the country. I get to interview people who are real estate professionals, mentors, coaches, and today I have somebody who's actually all three. Adam Triple Adams, welcome to the podcast.
Thank you for having me.
Yeah, it's like we were just talking about. It's been a long time coming. Adam, you said now 520 episodes of your podcast, the creative real estate investing. How did you come into the podcast arena in the first place?
I had a business partner who used to host a podcast years ago when they first came out. His name's DJ. He's always been on the cutting edge of technology, no matter what it was. He founded a company. He's always been doing technology companies, but he did a company like that was the very first email marketing company. So you can see he's like always on the cutting edge. He's been in Bitcoin since before you and I even knew what it was. And as far as podcasting, when they came out, he launched a podcast. That's what he wanted to do. He ended up quitting it. But I remember I had a meetup group that was doing really well, that was growing and growing and growing. And I just was wanting to take it to the next level. And the only next level that I thought of is I barely had bought an Apple for the first time, an Apple phone. And I learned what podcasting was. And I was like, that's cool. I want to do a podcast. So it was in 2017. We started recording in May with his help. He already had a mic. He had the computer that would do it. He had the software that would do the editing, all that kind of stuff. And I was nearly oblivious to technology. And so to me, I knew that I wanted to start one, but there were so many things that would have held me back from doing it that when I had a business partner that knew it from A to Z, I just said, perfect. I'll be the voice and you do all the hard stuff. I'll do the fun stuff. You do the hard stuff. Now, the truth is, because he's pretty introverted himself, he's thinking, you do all the hard stuff. I'll do all the fun stuff. So it was a match made in heaven. We started recording in May. Our very first guest ever was Matt Theriault, who has a very popular real estate podcast himself. And we were just in my business partner's basement recording, and then we moved to an office, and then I got this recording studio finally, and it's just been growing. And our main goal is just to add value, and somehow we're 523 episodes. And I don't know if your listener accidentally heard it, but I went to look at how many episodes, and I accidentally pushed play, and I was scrambling to get it off, because I was like, why is this on? Get off. But anyway, that was funny. Go. So that's that's my story, and I'm sticking to it.
I love it. So that's I would almost say your friend is definitely an early adopter, and then or maybe they're an innovator, and then you're the early adopter. I'm kind of like you, but I'm like the lagger, right? Like podcasts have been out for so long. And I only recently got in, and listening to yours and listening to some of the people that you've been interviewing has been a real inspiration. How did you get into real estate in the first place? Because you don't really talk about it too much. Like, how did you actually get into the first deal, and what inspired you to think real estate?
The very first deal was because I grew up in a family that was real estate investors, and I postponed it. Just to give you an example, my stepdad wanted me to read the book Rich Dad, Poor Dad back in 1997. That's the year it came out. And we had already owned the game Cash Flow for a whole year because it came out in 1996. And so my stepdad was an early adopter for things like that. And so anyway, that's how I started to get into it. But the first deal ever was when I was in college. My stepdad, I think, just kind of like was tired of waiting for me to bring real estate into my own path. And so he purchased a piece of property. He gifted it to me in 2005. And then his accountant said, you need your son to pay for that. Like, you can't just give him this or you're going to pay a bunch of taxes. So he kind of made me pay for it when I was in college and I didn't really have money. And so I paid the same price that he paid for it, which wasn't very much, but It was a lot for a college student. And so my first deal was really thrown at me. Like I was coerced through some type of either it was a birthday gift or a Christmas gift in that year. But that's how I got started, and I still wasn't passionate about it. Like I thought it was really cool that I could say as a college student that I owned a cabin lot. I just thought it was so rad. Like I was just talking to my friends. Oh yeah, I own a cabin lot out in Aspen Hills, it's pretty cool. I just ride my four-wheeler. There's nothing built there yet, but I own it. It's a piece of America. It's mine. And so
Right.
in 2007 I sold it for a huge profit, and I finally decided to read the book Rich Dad Poor Dad, and I found out that Robert Kiyosaki was an apartment investor. He owned a business to make his active money, and he did apartment investing for his passive money. And so I just thought, well, Robert seems to be like the head honcho here, and so like if I want to be, successful, I guess I have to skip single family and go into multifamily like Robert did. So that's literally my path. In 2008, 2007, I started managing apartments. 2008, I bought my first multifamily, and so I guess that's how I got into real estate.
That's pretty impressive. As a channel to get into it, you actually owned a piece of real estate before you were a dedicated, motivated real estate investor. So you owned a piece and you probably held it for years. Did you own anything else in between the purchase and sale of that property?
No, I bought that in '05, sold in 2007. The next piece of property that I purchased was in 2008. After being a property manager, I bought a multifamily, like a triplex, and house hacked it. So
Absolutely. So you literally followed the same path, even with a father who was in real estate investing and was surrounding you. You still followed the same path as just about everybody else. We got this one gift, which probably didn't feel like a gift at the time. It probably felt like, oh man, like I don't know why I'm buying this piece of land right now. But you did it, and you stuck with it. Sold at the peak, and I think a lot of people, if in your position, would not have done what you did. I think a lot of people just handed a piece of land, told they had to pay for it, would have sold it, made a profit, but not been committed to going and doing it again, going in and working in the industry like a year as a property manager before actually going and buying something. In the common sense to jump to multifamily, these are all aspects that make you specifically unique, like make you more unique than people who maybe in the past would have had, like everybody's had opportunities, but you took them differently. So now what is the type of real estate you're playing in now? Because I know you are the king of creative finance, the king of teaching people how to find the money, raising capital. I know you're hanging out in the syndication arena now. What does your portfolio look like? And more importantly, where do you see it going? What do you want it to look like?
I love that question. I didn't expect it, but I love it. So for me, where it is now is that my team at Blue Spruce, we own and manage, and we're general partners on 4 different communities, and then and we want to buy more. We didn't buy a single one in in the last 18 months. For the last half of 19 and for all of 20, we didn't buy a single property. And for us, it's the acquisition fees that you make as a syndicator are very beneficial, and we want to make them. But what's great is that we don't necessarily have to close on a deal to have enough money in the bank, and we can pay our rent or mortgages or housing or whatever, food, with what we have now, which is awesome. And I've only been able to say that for a couple of years now, but
Right.
um, I also am a passive investor. So I've been involved in 3 deals. They're bigger deals. A couple of them are like 400 units or something. So
Nice.
so my goal really, when you ask, is I would love to see Blue Spruce Holdings. That's our holdings company. I'd like to see my business partners and I continue to grow the portfolio, but smart. I mean, we don't want to just close something for an acquisition fee. If we don't think that it can give money to past investors, then we don't want to close on it. And so when we do close and we take significantly sized acquisition fees, because there's a lot of effort that goes into. I mean, we haven't taken a big paycheck for 18 months. 18 months.
Oh yeah.
And so whenever we get that next one, I guarantee our team of 13 freaking earned that. We
Right.
earned that. We skipped a lot of bad deals or okay deals or wishy-washy deals to get this next one. So
Right.
I just want us to stay level-headed and continue to grow in at a pace that we can keep up with, and stay focused on buying smart deals that work out in the end for us and our passive investors. And so how fast that grows, I don't care, but I want
Right.
it to continue to grow. And on the other side of my goals is I'm only invested in 3 different apartment communities right now passively. And my goal is to only invest in apartment communities. I have this app on my phone called Robinhood.
Oh
And so
yeah.
there's a bit of money that I play with, right? For stuff like that. But it's not like 25 or 50 or 100 grand yet, which is what I need to get into
Play
that
with.
next as soon as I have, that much of liquid money ready, I'm just going to keep going passive, because I found that it outperforms what I can do on Robinhood and
Right.
with less effort. And I feel like I'm supporting a team, and I feel like I'm in the ultimate position of utilizing OPT and OPE. Everyone else in the real estate industry is like OPM, it's the best thing. Yeah, OPM. Yeah, I've been raising OPM since 2008, and it's great, and I'll always do it. It's wonderful, but OPE and OPT is way better. Other people's experience, other people's time, and so when I have the ability to have 50 grand again that I put into somebody's deal, I'm going to seek those operators that I trust and diversify my portfolio so that it's not just in stocks.
Yeah,
And
I like
I
what you
feel
just
like
said.
I feel like it grows my money much faster. I
Yeah.
basically double my money every 5 or 6 years when I'm investing in other people's syndications. Actually, one of them, I'm probably going to double my money in 3 years, which is
Yep.
phenomenal, huge return. I can't even get close to that on the stock market. And plus, even if you did get that through 2019, at the end of 2019 and at the end of 2018, you
Got it.
lost the whole thing. It's like
Yeah.
now I need to start from scratch again. And that just doesn't seem to happen when you're picking good operators. So
No.
to answer your question, where I want to go, I want to just grow this portfolio organically, slowly, efficiently, and just whenever I have more money than I need, just put it in somebody else's deal. Hopefully, one day I can be involved in 30 plus apartment communities that I don't have to touch, because my money's just working for me because I'm utilizing other people's time and experience.
I love that, Adam. That is probably the best answer and probably the closest answer to my reality that I've ever had somebody give me back. And I love that you said you're at 3 right now. You want 30. That's 10x, right? That's Grant
There you
Cardone
go.
style. Like, get me some exposure, diversity. And in fact, I say the same thing about Robinhood, right? I've been playing with Robinhood. I started with 20 grand. I got up to 100, and that was from silly, lucky plays that I can't replicate. I can't redo it. And if I stayed in those stocks, I would have lost the money as well in March. So there's a lot of back and forth, and cryptocurrency. I should have gotten sooner. And like we all say these things, but at the end of the day, if you bought into crypto right now, you're probably going to lose money in the next couple of months. Same with Tesla. Like there's a lot of opportunity on any side of if you're buying at the bottom and you go to the top. But with rental property, you definitely even if the market goes down, you're still getting your paycheck, you're still getting your dividends, you're still getting the income coming in. So I agree with you 100%. You know, like some of the operators that I'm meeting on these podcasts, like you're now a new operator. I'm like, okay, if Adam comes up with a deal, I want in on that when the cash is there. And that's the biggest thing is, you know, is the cash there when the deal's there? And so I've been telling everybody that I talk to, just stack cash, like stack cash, stack cash, stack cash, because the right deals are coming and these guys are busting their butts all day. You got a team of 13 people who are looking for deals and evaluating deals. And I know plenty of other operators who have the same concept, same ideas. So the deals are coming. You've just got to have like be in a cash position for when the deals do arrive. And the cash position, I'm sure it doesn't have to be all cash in the bank. This could be people's 401ks using self-directed and 401ks and IRAs. Is that true?
Yeah, 100%.
Yeah. So people like for me, like I just decide I'm going to create a SEP so that I can go and drop a bunch of money into it and then invest in deals like the ones you're doing, which are passive income deals, 3-year double your income, 5-year double your income. Like those are the sort of deals I want to be in. So Adam, I love that you're already doing it, that you've been doing this for years. You have the right team, you have the right mentality. What do you think is the easiest way for somebody to get into what you're doing? If somebody wanted to get involved with a deal that you or another great operator are running, how could people find out about them?
If they want to find out about our deals, then they can just go to our website. It's realbluespruce.com. And there's a button, literally as plain as day. It just says get on the list. It just says get on the list. You push the button and it'll ask you to do an investor questionnaire. We have to do that legally for everybody who invests with with us in our deals. And so that's just a step that you'll take to get into our deals or anybody else's deals. You want to go to our website, realbluespruce.com, click the button, get on the list, and then just do what you need to do. And you'll end up probably having a phone call with my business partner, DJ, who we've talked about being the early adopter. He does our asset management and most of the investor liaison work. So, yeah.
Awesome. I love it. So that's the easiest way to get in touch with you. Adam is somebody that you can invest with. Like you said, he hasn't done a deal for the last almost over a year because the right deal hasn't shown up. And the deal, yes, they have a high fee that they charge for setting up these deals, but that deal has that fee baked into it. If they can't find something good enough to pay themselves, they're just not going to jump into it. So this is the type of investor that you want to get involved with. He's got a podcast, the Creative Finance Real Estate Podcast, Creative Real Estate Podcast with over 520 episodes, all value content. He's a giver, give. So definitely check him out. And Adam, 3 pieces of advice. If you were to give somebody 3 pieces of advice, say they're starting out, 20 years old, say they are pushed into real estate or they aren't pushed into real estate, and they're starting off, what would you go back and tell your 20-year-old self if you go back now?
Super good question. The first thing that I would have said is because I was in university. I took 2 years off and did like a mission for a couple of years in Los Angeles, knocked door to door and sold religion. But and so then I came back, and so I was in my mid-20s when I graduated college, and so at 20 I would have actually been on the mission. And I guess what I would have said is when you come back, girls are not the most important thing. You're pretty extremely celibate, like extreme. You're not doing you can't even like look at a girl, right? When you're serving. So that kind of, we're all animals. We just are. And so like that was what was on my mind when I came back. I was like, oh, finally I can go on dates, I can do this. And I guess really what I would have said to my 20-year-old self is focus on your future before you focus on the now. And because I think a lot of 20-year-olds, they do it backwards. I certainly did. They do it backwards by meaning that for a lot of us, we are taught that we don't need to wait for, what is that gratification, instant gratification. We're taught instant gratification. We're taught like, just do what makes us feel good today, do it what makes us happy today, put off tomorrow what can be done tomorrow. And and that was me. And so I would have rather told myself to focus on what's going to happen 20 years from now and then work backwards from there. Because I think I would have had a much better plan going into it. So that's the first one. The second thing that I would have said is that um, to get into multifamily a lot sooner. For instance, my first deal was land, as we mentioned, and land doesn't cash flow. So when I got my first tax payment, I was so mad. I went to my dad and I was like, what did I do wrong to have to pay these taxes? And he said, you didn't do anything wrong. You just have to pay your taxes. I was like, I haven't even seen the property yet. I haven't done this. I haven't done this. Like, why would I need to pay taxes? I'm not really using it. And he just said, that's just a part of life. And that Robert Kiyosaki talks about, if something takes money away from you, it's really a liability. And so that first piece of land, because it wasn't cash flowing, was a liability. So I would have rather learned sooner that that cash flow was really the name of the game. Now I could have done that if I listened to my dad and played the game earlier, but that's the second advice. Cash flow, go for cash flow, not just for owning stuff and feeling good about owning stuff, but you want to make sure that everything puts money into your pocket every month. That's critical. A third piece of advice would be, instead of doing triathlon, go do mountain biking. I used to think triathlon was so badass. I was like, triathlon, I'm so cool because I'm doing all of these things. And I just thought I was really awesome. But mountain biking is 10 times more fun. You really get to push yourself in a lot of different ways. And so I think I wasted a few years doing triathlon. I would have done mountain biking.
I love that. Very practical advice. Very detailed. That's awesome. Adam, phenomenal advice. You are the king of creative finance, of helping people raise capital and find the money to do their own deals. And I think one of the reasons that you teach, building wealth and finding money and doing and investing is, so that eventually somebody can operate and invest in one of your deals as well. So you can help them earn that passive income. So right now, if you're listening, what I learned from Adam today is you've got to go get involved. You've got to go for cash flow and do something that you enjoy, and make sure that it's something that is healthy for you, right? Mountain biking is a great choice because you can enjoy it. It's passive, like it's valuable for your body and for your mind. You got to go out and enjoy these things. So I love that this you're the first guest to actually give advice that also involves happiness. So it involves like going out and playing. So great job, Adam. And if somebody wanted to get in touch with you, what is the easiest way they could contact you again? Website, email address, Facebook.
Perfect. Well, if they are looking to be a passive investor, it's probably just easiest. They do what we shared before, which is realbluespruce.com, and click get on the list. And if they're looking to attract more capital, start a podcast, have a following, that kind of stuff. Raisingmoneycoach.com is probably going to be the easiest place for them to go.
Raisingmoneycoach.com. And you can find him on Facebook and LinkedIn. He's Adam Triple Adams. The triple is in there. Is that your actual name, Adam Triple Adams?
It's my name is Adam Abel Adams, so it's just AAA. Everybody calls me AAA. So Adam AAA Adams is what's on Facebook. I just decided when everybody called me that, I just decided to own it. I finally said I'll just own it. It was like 2015. I changed my name on Facebook to Adam AAA Adams.
I love that. So Abel is just a hell of a middle name anyway. So dude, that's awesome. Adam, so much value, man. Thank you so much. And
Thank you.
At some point, I definitely want to see how me and Darina and Ron can actually expand your influence and what you're doing. And I think we can learn a lot from you and your podcast and what you've created. You've been doing this way longer than us. Your meetup is huge. You got a great following and great community. So looking forward to doing more with you, man. Appreciate you. Cheers to your success. We have a choice. Always work with the best. Talk to you soon, Adam. Later, brother.